Hi guys, thanks for tuning in to another episode of Nuggets News. We've got so much macro news and crypto news to get through. There's a lot that's actually intertwined this week, so I'd encourage you to watch the full episode. We do welcome 200 new subscribers this week, a bit lower than normal. That tends to happen on the slow news weeks, and it often is the best time to be dollar cost averaging when sentiment is low. I remember the only day we've ever lost subscribers was the day that Bitcoin bottomed back in December 2018. So I want to give a shout out to James, who is this month's Josh Turnbull Member of the Month, our late friend Josh. In honor of him, we've got this membership of Member of the Month award for whoever does the best post in our members group, and his post about psychology and trading overlapping with everyday life was the best post in our group this month. So congratulations, James. Just a quick reminder as well that you can win $50 on any one of our videos by commenting your favorite part of that video. So congratulations to Daniel, who has won that this week. All right, into the local news. So another interest rate cut in Australia, record low of 0.75%. The banks didn't pass on all of that cut like the government had hoped. We've seen the first criminal charges following the Royal Commission, with CBA following up to 87 charges. They'll be facing a maximum fine that's been reported now as low as $1 million after last year's profit of $9 billion. So I'm not sure if that's going to change their behavior there. We saw an interesting survey going around that up to 40% of loans that are still being given out present day are liar loans, where people have given non-truthful answers on their applications. Now, a few people were saying that's not possible with the checks that are done these days. I've had other people say that yes, this is still really regularly going on everywhere in Australia with brokers and the banks and whatnot. So let me know what you guys think about that in the comments below, particularly if you're in the industry. Another little chart here I want to share with you about record exports to China. It's fantastic in some regards. In others, we are really reliant on those exports, and those prices have been pulling back a lot recently. This is a bit of a headache for the Aussie pension funds, the super funds that we discussed in our documentary. We've got negative yielding bonds everywhere. These super funds have to have a high allocation to bonds. Aussie's super's sitting around $2.9 trillion. That's expected to grow to $5 trillion in the next decade. And there's just nowhere that they can park their money now that's getting that 7% growth that is required. And we need to compound that if all these retirees have any chance to be able to actually collect a pension. So that's a big headache that all governments around the world have to solve. And, when I talk about retirees, I'm very lucky. I've got all four of my grandparents. I still chat with them, and I love chatting about the olden days. Pulled out these documents. So $26 for 2 months scaffolding and $11,000 to build their house back in 1973. So what do you guys think about that? Are the inflation figures accurate? Or is a house a lot more expensive relative to wages? I'm going to get Grandpa on the channel to talk about that soon. It's never been more important to build that nest egg and extend your financial education. So I can't encourage you guys enough to go down the rabbit hole, learn as much as you can, self-managed super if you can afford it with New Brighton Capital. Book a free consultation, chat about whether or not this is for you. You can put some crypto and Bitcoin in your self-managed super for the longer term, as well as gold and silver, and get the right mix of stocks. So we do thank them for supporting the channel. The last thing I wanted to mention here was a bit of news that it's not new, but I wanted to push it out again because we've had more crackdowns on our freedoms in Australia. Aussies now facing 5 years in prison or $50,000 fine for not handing over passwords or PIN numbers to any devices on you if a policeman or any law enforcement asks you to do that. So a lot of people aren't aware that this is even a thing. A lot of people just, daydreaming, walking through life, unaware of what is going on around them, and their freedoms are being eroded. So I know that's frustrating at times, but I do thank everyone that is spreading this message and getting people to subscribe to our channel, learn about all these issues. So over to the UK, again, AML, KYC regulations for open source software is what they're encouraging now, which is crazy to think that people would not be able to even use open source software and share it around. This is going to include a lot of digital assets and cryptocurrencies. So the UK, they're really taking strict measures against people's data and what people are allowed to do. So the United States imposed some tariffs on the EU imports beginning October 18, 25% tariffs on a range of goods. Trump is certainly firing from the hip at the moment, trying to protect the US economy. This is affecting everyone. We certainly see the spillover in Hong Kong here and the friction with China at the moment. So we did see a young individual get shot this week. I spoke about this about a month ago and said that my friends in Hong Kong told me that the media was sort of blowing this out of proportion a little bit, but he actually said now it's actually got pretty bad, pretty unsafe. We're seeing, shops affected and businesses shutting down. Whether or not Bitcoin volumes hitting all-time highs is directly related to this or capital flight out of the country, but that picture has certainly changed. Now, all this friction with the US does benefit some countries more than others, and Russia are preparing to, up the relationship there with China for wheat, soybeans, and certain goods. We've seen Russia's largest oil company ditching the dollar, so we know that a lot of these superpowers want to get rid of that US dollar hegemony, and even Mark Carney of England has said that recently. Mall closures and vacancies hitting 8-year highs. Software is eating the world, and there's less and less reasons to have a store and to go out and shop in the malls these days. Transports, manufacturing, heavy-duty truck orders collapsing 71% in September. Global semiconductor sales down 15.9% year to year in August. So this all ties together that people aren't buying digital goods. We don't have manufacturing of those bulk goods, and people are going out to malls shopping. Millennials are now having to put everyday items. This is an absolute obsession in Australia. Afterpay and similar companies. I just spoke about my grandparents and affording to be able to buy a house and how many years that would take to pay off. People can't even afford shoes these days without going on payment plans. We're obsessed with debt. It's absolutely mind-blowing. Something I'm really proud of is avoiding never having a credit card or being able to go into massive debt for everyday goods. It's just crazy that people think that this is the new normal. At a time when unemployment has hit 50-year lows, we know the way that they calculate the figures. Underemployment is growing. We've got people that aren't getting as much hours as they want. They're not getting the wage increases that they want. But once you massage those figures around, unemployment at 50-year lows, and we know what that means, guys. Just like trading and charting, when things are at record lows, there's normally only room for them to revert back to the mean and go higher. With all this going on, corporate buybacks accelerate, stock prices are rising, strongest weekly levels in history of buybacks. It's insane that this is all leading to inequality. One of the Fed members coming out and calling for more vigilance around corporate debt, because these companies are just issuing debt because interest rates are so low. And once they get the money, they just buy back their own stock and push up the share price and make themselves rich because of the shares and options and performance bonuses that they get. So very frustrating to see. At a time when all this is happening, we've seen the IRS come out and say that it's just easier and cheaper to audit poor people. We don't want to chase the rich because they can afford lawyers. It takes more time, auditing them properly with all their trusts and offshore accounts. So yeah, we just go after the poor people. Man, this stuff it's got to make you scratch your head. How can all this be going on? Now, unofficially, QE4 has launched, so this isn't the same as QE 1, 2, and 3, those repo operations, but if you look at the balance sheet, it is growing. It's pretty simple. There's not enough money for these markets that are all based off derivatives and rehypothecation to be stable, and the Fed have to create money to buy assets to shore up the banks. So that is just the world we live in at the moment, and this is ongoing. Donald Trump continues to fire at the Fed. He's calling them, pathetic. They don't have a clue what's going on. They're our worst enemies. Talk about friction with rates remaining high. I think the US are just going to have to cave and cut rates because the US dollar is getting too strong. We've seen lawmakers ask the Fed to explain their views on why the US dollar could or couldn't go digital at a time when every business and corporation and other country is experimenting with their own digital currency. Coinbase are looking more and more like a bank every day, now offering interest rates. So this is far lower than what you can get if you're a bit more tech savvy and you've watched our tutorials about DeFi. But again, with all that banking system in the US, Coinbase are a pretty trusted large corporation these days. People are going to suck money out of the legacy financial system, park money in USDC stablecoin and earn interest. So Coinbase are now, a target, an enemy of the legacy banking system. Now, Apple have been one of the few companies that aren't really interested in issuing their own crypto and saying that money must remain in the hands of the state. So maybe Tim Cook is friends with some higher ups and he doesn't want to rub anyone up the wrong way. But yeah, that's interesting to hear him taking a pretty different approach to a lot of others. US House Committee demanding that Zuckerberg testify again before January. So Libra have been put through the ringer, and Coinbase have been one of the people, Brian Armstrong, coming out and saying that he reckons that US has been way too harsh on Libra, while other countries have really pushed back. We see this week that PayPal have reneged their involvement with Libra. We're hearing rumors that Visa and MasterCard may also be leaving now. So are they going to do their own? Are they going to get that $10 million back they had to pay just to be able to run a node? But at the same time, we've heard that up to 1,500 businesses are interested in Libra. So let's see how that plays out. But I think it's still a long way off before that launches. BitPay have added support for XRP. So much competition out there in the payment space at the moment. A little company called Rapid that's backed by Stripe have raised $100 million to try and disrupt the global payment system. We've seen India unveiling that draft where they're proposing that people are going to face years in prison for even touching cryptocurrency in any form. That's really disappointing. Zimbabwe deploying capital controls, banning mobile cash payments, and you're not even allowed to talk about what the FOREX rates are of other fiat currencies, and just locking people into a system that's going to be hyperinflated. No way. Anyone there that's savvy enough to be able to get their hands on crypto or stable coins, they're going to get out of this Zimbabwe currency before it hyperinflates, the same as we've seen in Argentina, Venezuela. A bit of a different opinion here was the German state bank coming out and saying, we see Bitcoin as the ultimate hard money, something we've been speaking about for years, possibly going to $90,000 compared to fiat currencies. It's far more valuable and it's not going to be inflated away. So, banks laughed this off for years and years, and now we've got the first state bank coming out and saying that, yep, Bitcoin is pretty good money. So the SEC fined EOS, or Block One, the company behind EOS, $24 million. Bit of a slap on the wrist. That was, 0.6% of the amount of money they raised. There's been plenty of talk about this. It doesn't set a good precedent for other ICOs that had to shut down because they got fined so much and whatnot. So yeah, let me know what you guys think about that. There was another little fine this week for SIA. They had a 2-tier coin back in 2014. So this is a little bit different to the current SIA coin that you guys have probably know and love now, but still another fine that went under the radar a little bit this week. Carrot bars. Now, this is one that, again, a lot of people are saying this is not a scam nugget, but anything that promises returns and has that affiliate marketing program and hasn't been regulated, hasn't been audited, we don't know where this gold mine is that they supposedly own. So anything that's got red flags out there, I'm not a fan of. Don't touch it. It's just not worth the risk. Mathematically, these things tend to collapse in a matter of 1 to maybe 3 years. Another one that's been going around is OneCoin. This has been going around for years now, and they haven't been able to track them down. These scams are very, very sophisticated, and it's almost impossible to convince people they've been scammed because of the way these pyramid schemes pay out early. They reward some of the early adopters, and people are absolutely blinded by these things. So there's a lot going around. Hopefully, if you're a subscriber to this channel, you understand how pyramid schemes work by now, and you've protected your friends and family from getting involved. Now, Cardano had a good partnership announcement with New Balance to stop these counterfeit kicks. A few people in our members group were saying that this is going to really hurt Bali and Thailand, and a lot of those fake goods that is basically a lot of their economy, particularly to Australian tourists. But the Cardano founder here, Charles Hoskinson, did say that he would eat his own shoes if he didn't get staking rolled out this year. So they've got that alpha, that testnet rolled out, but he's going to eat a cake in the form of a shoe because some people are saying, I'm not sure if that counts, Charles. But either way, it's good to see him sticking to his word to some degree. Now, Power Ledger have partnered with another fantastic Japanese energy company, Sharing Energy, EREX, P2P trials. The number of trials they've got going on, 500,000 solar consumers. They're definitely coming on the channel soon. They tell me they've got a few more announcements and things they're working on. So the more news we can talk about in that interview when we have them on, the better. So we might wait a little while. We've seen Cosmos come out and disclose a critical vulnerability in the Tendermint consensus. So many proof-of-stake chains out there. They all promised to eat Ethereum's lunch, but now they may be facing more headwinds than they first thought. We've seen Algorand lose some capital funds this week after their CTO's phone got hacked. Another bug in Maker. Part of their bounty program was to find these sort of bugs, so it's great that they did find it before it did go live. Telegram launching, so whether it's EOS, Cardano, there's just so many proof-of-stake chains that are going to be coming online in 2020 and competing for market share. BitTorrent and Tron is another one, launching that file sharing system. Whether or not you're a fan of Tron, they have got this out and launched it on mainnet, so if you're a user of BitTorrent, do you see any reason to own BTT token, or are you perfectly happy sharing torrents the same way you have done for years? In terms of privacy, we've spoken about this a fair bit over the years, and Chanalysis have now come out with more of their tracking services for ERC20 tokens as well as the Bitcoin and Ethereum network. This is a cool little website I'd encourage you guys all to check out. This is wiggle.net, where you can zoom in on anyone's home Wi-Fi router. You can see the name of it, the IP addresses, and as Edward Snowden says, every single thing you do, every phone message, every email, every text, everything you do over Wi-Fi, it is all being tracked these days. It's no longer a conspiracy, it's just fact, and a lot of people just don't realize that. So to stay private, I'd encourage you all to use a VPN, use Brave browser, use Tor. We've got Mimblewimble now coming to Ethereum, as well as ZK Snarks, which I've spoken about recently. I've done a tutorial on how blockchain explorers work and how you can better maintain your privacy this week if you want to check that out. And we got the news that Brave themselves will be helping the VPN ecosystem with their privacy-preserving distributed virtual network. So very cool stuff. I'm a massive fan and supporter of Brave and everything that they're doing. I'd encourage you all to download the browser if you haven't already. This week we got a cool little announcement out of a project called Arwen, supporting Ethereum, cross-chain atomic swaps, instant settlement, very, very cheap settlement compared to exchange fees. So atomic swaps, all this stuff is coming to Ethereum, and any sort of interaction they can do on other chains, Litecoin, Bitcoin Cash, Bitcoin. Very, very cool to see this on a public chain now in testnet form. We've got aggregators. This was a good little article about how all these different DeFi projects building on Ethereum and the DEXs, we're now seeing a lot of that volume being aggregated into one spot. So I really think some of the better DEXs, or even just the aggregator, the front ends, they're going to start to compete with a lot of these other exchanges in the next 12 to 24 months. A cool little phone app here I saw during the week was Astro, and this one allows you to hook up your credit card or bank account and interact with Ethereum dApps without having to, understand how Ethereum works or pay gas and hold Ether. So you can just use dollars on the front end to play around with CryptoKitties and Ethereum dApps. So that's really making the front end a lot better for the everyday user. They don't even know that they're using Ethereum and the blockchain. So very cool to see what Astro do, and I've signed up for some early access there. Matic, another project working on Plasma, have launched their beta mainnet. Might get those guys on the channel again soon. One that got pumped up a lot, came back a lot, but I actually think they're doing some good things, along with another little project called SKALE, which raised $17 million for their mainnet launch. I believe these guys are also working on a sort of Plasma implementation along with Amisa Go. So there's a lot of projects that are now making Plasma a reality as Ethereum continues its scaling mission. Morningstar is a established business in the stock market, Wall Street world, and they do a lot of ratings about different companies, and they are now building a blockchain bridge to make that huge industry of investing familiar with different blockchains and give them a bit of a rating. So we also saw Coinbase come out with their crypto ratings council this week. That's drawn a bit of skepticism. But either way, those with deep pockets, older investors, they're waiting for these sort of rating agencies and, insurance all to come to the space before they invest. So Coinbase did cop a bit of flack this week for increasing fees a lot. I'm not sure why they did this. With so much competition out there these days, I'm sure that people are only going to leave Coinbase if they're going to continue to raise those fees. Bitgo have launched their custody. Along with Coinbase, we see a lot of these exchanges now offering staking for these different coins. I think that yield is going to be really attractive in a negative bond yield environment globally. So a lot of staking coins are going to be pretty popular next year as investment plays. That's going to lead to some sort of altcoin cycle, in my opinion. And we did see the first block on backed by Galaxy Digital, Mike Novogratz's fund. So low volume the first week of backed. There's no reason to buy at the moment as an institutional investor when price is going down. Now, speaking of price, thank you to Bybit, this week's sponsor of Technical Analysis. Up to $200 now they're offering as a sign-on bonus, and there is a link below. They've got that drop and drag feature now to place your orders, your stop loss, and your take profit. So fantastic trading engine, a lot smoother than BitMEX, particularly for beginners. They've got the 4 coins that they offer against US dollar pairs and leverage there. So have a play around with Bybit if you haven't already. Alrighty, so this is the 4-hour chart, and we've really just been bouncing around in no man's land for most of this week since we had that big plunge last week. So we're looking for a bit of a push higher if we can bring that up with our cycle brackets. It just hasn't really unfolded, but at the same time, we haven't broken those lows yet. So if we break that sort of 7-8 level, I would expect a bit more of a fall. Now, there's a lot of buyers looking to buy at 7.5, 7.2, 6.8, these levels from, previous trading action that have been thrown around. And the reason I think we're in a bit of a no man's land is that a lot of people want to buy. So I know that there's nothing bad necessarily that's happened, but there hasn't been anything good, a catalyst to give people a reason to step in and buy. So the next 24 hours I think is pretty crucial. I'd love to see a flush down to put my trading hat on. I think this would be a pretty good buying opportunity. Let's go out to the weekly. A little spinning top doji like this is our best chance for a reversal. Even if we touch down and then close the week strong, this can be a reversal pattern to let us take off again. So let's just have a quick look at the monthly as well that closed. Not really that pretty of a picture, but those moving averages, we are getting towards them now. A touchdown into those moving averages would be really nice on the monthly time frame. Let's zoom in and have a look at Bitcoin dominance, because that is rolling over. And if we lose that sort of 69 level, that's where I think altcoins are going to have their best chance to shine. And the chart that I've been getting our members to focus on and doing daily updates is this ETH BTC pair. Now it's just putting its head above this little triangle that I'd drawn for members this morning. Let's see if we can get a breakout. I think there's going to be some good margin trading opportunities on a range of coins, whether it's Litecoin, XRP, Ethereum versus Bitcoin. And congratulations, members, we've got that trade playing out now. So this is fantastic to see. What are the chances of this happening live at the exact time that I wrap up that video? If you want to become a member and get our daily updates, head over to nuggetsnews.com.au. Otherwise, I'm going to wrap it up, guys. Smash that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.